Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're here to in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
Yes, it is. Welcome, everybody. Over the years here on the program, we don't do buy, sell, hold on this show. We've spent a hell of a lot more time just understanding the psychology of the American investor. It's something that I've spent a lot of time over the years reading about, based upon, what I have to deal with on a regular basis. Why people do the things that they do with their money. There was a psychological term that was thrown at me this past week I was familiar with, but it was kind of funny. Cognitive dissonance. You know what cognitive dissonance means? It's the state of having inconsistent thoughts, beliefs, or attitudes as relating to various decisions, behavioral decisions, and attitudinal changes. And I thought about that this past week, and it was funny. The Wall Street Journal brought it up as well. And it was in regards to the current resident of 1600 Pennsylvania Avenue, that President Joe Biden, and his goal to reduce U.S. oil and gas production, right? The squad, all the left, we got to get out of all these fuels. We're gonna limit global supply of fossil fuels. This is in the name of fighting climate change. But at the same time, Biden and the people in Washington are calling on OPEC. Our old friends there at OPEC. Oh, yeah, we basically knocked OPEC out, right? Basically knocked OPEC out. We became the most dominant, most powerful energy-producing nation in the world. And then, you know what? We said, we're not going to do that anymore. We're going to give OPEC back its power. So the Biden administration is calling on OPEC to pump more oil so that gasoline prices don't rise more than they already have. You explain the logic behind this. We canceled the pipeline too, right? There's a lost 5,000 plus jobs. But we don't have any problem with the pipeline now, at least not anymore, have any problem with the pipeline going from Germany to Russia, the Nord Stream 2 pipeline. Doesn't make any sense. And the reason why I bring this up, much of what you watch and what you hear in the news, much of what you watch and what you hear, especially when it comes to these wizards of smart, these economists, the Federal Reserve, it doesn't make any sense. I want to talk quickly about some of the volatility that's coming into the markets. And whenever there's run-ups or sell-offs, people always ask me why. My answer is, I don't know. I really don't, because the reality of the situation, there's a reason why so many investors out there that go it alone and don't really have it. They're not about financial preparation. I don't even call what they do. We talked about this before in the program. I don't even call what they do investing. It's speculating. We invest. Most people speculate. There's a problem we have in this country, without a doubt, in regards to retirement savings, the concept of retirement. Again, I'm not a big believer in trying to plan for retirement, especially at a young age, because what does that mean? How do you know when you're going to want to retire? And that retirement plan might actually take away opportunities for you in the future. So what you do is you just prepare. Some of the wizards of smart in the investment industry. They all come up with their different charts and gimmicks. You see it in marketing plans, all sorts of stuff that they come up with, the commercials on TV. And some of them are just patently absurd. A lot of them are algorithmic financial plans. I remember seeing this years ago and scratching my head, with people, the various different layouts that they want people to have in regards to their 401ks. And again, you can't access your 401k unless you're taking a loan or you want to pay a hefty penalty for an extended period of time. And them telling young people, oh, you could be super aggressive in this. Why would you do that? Why would you do that? You don't have to be super aggressive. You just need to be smart. You need to manage risk in this because guess what? You see 8, 10, 12% a year for 20, 30, 40 years. You're doing pretty darn well. Why do you want to take ridiculous amount of risk on, especially in a retirement account? Things are going to happen. Things are going to happen. I've talked about one of my favorite authors and philosophers, Nicholas Taleb, and he's read one of his best-selling books, phenomenal, about the concept of black swans. And with the concept of black swans, they unfortunately, the media doesn't really understand it. They called the pandemic a black swan. It wasn't a black swan. Black swans are things that happen that there's no way you could see that coming. Well, we knew. I mean, pandemics have happened in the past, and we understood. Everybody understood that they could happen again. That's why we have the World Health Organization and the CDC that are supposed to deal with this stuff. Now, when you're preparing for your future, that concept needs to be taken into account. Rather, and I know I've said this before, rather than planning for retirement, one prepares. That's what we do. I talk about that with my kids that I coach there. We want to prepare so we can handle anything on the field. One of my favorite drills, I'm getting into my world of lacrosse right now. You have different coaches on the field, and each coach has got a bucket of balls there. And all of a sudden, we shout out a certain situation or a certain score in a game, certain time. Roll the ball out. What do you do? What do you do? How do you react to those situations? Talked about the Navy SEAL that told me you can go into battle with a map and a plan. When you get to the battlefield and the terrain and the conditions are different than what you expected, what do you do then? Well, you better go with the terrain. I also mentioned this, brought this up, Warren Buffett. I'll never forget this. Back in his 2007 annual report, his annual message to shareholders, he wrote it in the form of a help wanted advertisement. And it said, wanted, a young man or woman with the potential to manage a very large portfolio. The ideal candidate must be someone genetically programmed to recognize and avoid, including those never before encountered. Those are those black swans. Other key requirements: independent thinking, emotional stability, and a key understanding of both human and institutional behavior. What Taleb, Navy SEAL, and myself, what we're trying to get across is, guys, expect the unexpected. Now, did I think that there was going to be a pandemic starting up in January, February of 2020? No. We saw, unlike the Fed and everybody else, there was a few of us out there that saw the financial crisis. We saw that. We told you about the dot-coms, but they're things that you're not going to see. So when the market sells off for no apparent reason, and then they start parading all of these so-called experts on TV trying to explain it to you, don't bear them no mind, and don't be surprised. Don't be surprised. Remember when Forrest Gump, and he's running across the country. Remember that scene? And he steps in a pile of you know what, and he says, "Poop happens sometimes." There it became a saying back in the 1970s, except they used a different word for poop. The investors, the people out there, again, I study this, okay? We try to drive people in the right direction. When I craft this show, I try to make things as simple and as understandable as possible so you don't fall into the various different pitfalls that are out there. The investors that lose time and time again, and this includes the wizards of smart, the hedge fund gurus. Yeah, those people that have won Nobel Prizes and decide to start up investment funds and get crushed and almost take down the entire financial markets. Oh, yes, all those mathematical geniuses with their algorithmic trading. The reason why hedge funds continue to go out of business at an ever-accelerating pace. The stockbrokers, the financial advisors promising ridiculous, outsized returns. Or the idiots that you'll hear on radio and television pitching their magical software trading program, newsletter, whatever the hell it may be, that will make you money no matter what. We'll make it matter no matter what the market is doing. Come on. You're going to lose. And again, I get back to this, a psychological, it's a condition. They call it a condition. I call it a disorder. It's called the Dunning-Kruger effect. Yeah, the Dunning-Kruger effect. They don't know what they don't know. This is a cognitive bias in which people of very low ability have this illusory superiority and mistakenly assess their intelligence, their cognitive ability as greater than it actually is. The cognitive bias of illusory superiority comes from the inability of low ability people to recognize the fact that they don't have that ability, that they're not that smart. These people are not self-aware, even though, hey, they'll tell you how bright they are, and the people that they're interviewing them on TV will tell you how bright they are. But again, they're proven wrong again and again and again. And yes, I'm including Larry Summers, Paul Krugman, Joseph Stiglitz, all these hedge fund guys that they bring on, Alan Blinder. I can go on and on and on. The ones that are telling you what to buy, sell, and hold. The ones that are telling you there's no inflation out there. The ones that are telling you socialism is just awesome. People, you need to understand the terrain. And that's what we're here to do. Going to take a quick break. Again, I invite each and every one of you to become a part of our family at Markowski Investments and the Watchdog on Wall Street radio show. Take advantage of our personal CFO program. It's right there at our website at watchdogonwallstreet.com. Have a lot of other great stuff there as well, my friends. We have our account repair kits. If you've gotten whacked and beat up, made some serious mistakes, it's a great program of getting yourself back on track. We have our newsletter. We have all sorts of great stuff that is available to you, all free, at watchdogonwallstreet.com or by giving us a call at 800-471-5984. Don't go anywhere. We'll be back.
Where man is killing.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
One more quick tidbit here in regards to financial preparation. And I know I've talked about the importance here, written about the importance of resilience when it comes to managing one's assets and dealing with the inevitable financial storm. There's no better description. Again, I'll go back to Nicholas Taleb, who invented a better one. He came up with the word anti-fragile. Anti-fragile. Some things benefit from shocks. They thrive and they grow when exposed to volatility, randomness, disorder, and stressors, and love adventure, risk, and uncertainty. Yet, in spite of the ubiquity of this phenomenon, there is no word for the exact opposite of fragile. So let's call it anti-fragile. Anti-fragility is beyond being resilient or robustness. The resilient resists shocks and stays the same. The anti-fragile gets better. This property is behind everything that has changed with time, evolution, culture, ideas, revolutions, political systems, technological innovation, cultural and economic success, corporate survival, good recipes, the rise of cities and cultures. And investors need to take the concept of the anti-fragile and apply it to their portfolios. You also should apply it to your lives. Anyway, you want Black Swan for me? I'll give you a Black Swan for me. There's something, like I said, I didn't know. Knew a pandemic would come at some point in time. It's not a matter of if, it's a matter of when. They made movies about it. Plenty of them. But was it Contagion? Contagion was one, and then there was Outbreak with Morgan Freeman and Dustin Hoffman. There's been plenty of those movies going around. It television shows, Blacklist and stuff like that. Virus is getting out. Anyway, it's a black swan for me. Is the fact that inflation is running as hot as it is. Again, we're being lied to. I'll get into that bit. And seeing supposedly risk-free assets at ridiculous levels. Well, a 10-year Treasury went below 1.3 this week. 1.3 this week. Again, it's been bad for a while. It's been bad for a while. I know I've given this description before in the program, and again, we get new listeners and new stations all the time. Well, I want everybody to get your arms around this concept that 30 years ago, if you worked your tail off, let's say you had one would call a middle-class job. Let's say that you were a school teacher, or let's say you owned a small business, and you worked your tail off, maybe got a second job, and you put your kids through college, and you paid off your home, and you still were able to. You were smart. You socked away money. Because, again, the most important thing is time in the market, right? Pay yourself every single month, something we teach here on the program. No matter what's going on, you continue to pay yourself every month, and you continue to invest. You don't try to time the markets. And you do that. You do that for 25, 30 years. And you know what? You want to retire. Now go back 30 years, and let's just say you hit a magic number. You got $1 million you put away. $1 million. And you got your pension, maybe you sell your business, maybe you downsize, make some extra money on your house and decide to retire to Florida, whatever it may be. And that $1 million, and you don't want any risk. You don't want to take on any risk at all. You could take that money 30 years ago, and you could buy risk-free assets, and you would make tax-free over the course of the year, over $70,000. Over $70,000. Now, again, I want you to go back in time 30 years ago and remember the cost of things from 30 years ago. How expensive things were 30 years ago. For crying out loud, you can't even get a pickup truck now for under $50,000. Today, that $1 million in risk-free assets, tax-free, well, you're making under $13,000 a year. That's the reality. And at this point in time, I know I mentioned this. I don't know if I did it on the radio show, but on the podcast, keeps coming to mind. I keep seeing Jay Powell. I keep seeing Janet Yellen. I keep hearing from these people at the Fed. I keep seeing these talking heads on TV talking about this transitory inflation and it not running as hot as everyone thinks it is. Alan Blinder this past week in the Wall Street Journal. No. What they're telling you is don't believe your eyes. Don't believe the bills that you're paying. believe us. Well, that, my friends, is just stupid. If you believe Jay Powell, if you believe these idiots, okay, and you don't believe your eyes, well, I'm sorry. That's just plain dumb. And to quote Michael Corleone in Godfather 1, when he's, going after his brother-in-law there, don't insult my intelligence. It makes me angry. WatchdogOnWallStreet.com, WatchdogOnWallStreet.com. Don't go anywhere. We'll be back.
Chris Markowski is the watchdog on Wall Street. This is the watchdog on Wall Street.
Welcome back, everybody. It is the one, the only, the Watchdog on Wall Street show. Again, reminder, everybody out there, become a part of the Watchdog on Wall Street family, the Markowski Investments family, by getting to our website at watchdogonwallstreet.com, our personal CFO program, and all sorts of other great stuff there. Podcast as well. I mentioned that. A lot of new listeners out there. I do a daily podcast. I try to keep it short and sweet, in and around a half an hour. We average about a half an hour every day, going over some of the major stories of the day, dispelling the narratives that the press and the people in power are trying to push on you. Kind of like the fact that inflation is transitory. Oh, yes, this past week, if you went to CNBC or Fox Business, the other ones are waiting on the investors are waiting on the Fed minutes. Really? You might as well, honestly, I don't know, watch Keeping Up with the Kardashians instead, or listen to your favorite sports radio program, because you're wasting your time. The Fed puts out its report there. We might need to pull back a little bit on the support we're giving to the economy. But yeah, we don't want to do it too soon. Again, they're purchasing $120 billion of Treasury and mortgage securities every single month. The money supply, it hasn't grown at the level that it has over the past year since the 1940s. And again, they're starting to think, maybe we should start pulling back. And the other one is, we were surprised at some of the inflation numbers out there. When are they not surprised? What exactly do you say you do there, huh? Besides being wrong all the time. Wrong all the time. You didn't understand the run-up in .coms, did you? No, you didn't understand the subprime collapse, the financial crisis. For crying out loud, Ben Bernanke said that there was no problem at all. The subprime situation will be contained. Meanwhile, we got hedge funds blowing up all over the place that had tons of stuff in there. It was as plain as day. Yet we continue to look, the numbers keep coming in. There's a story this past week talking about supermarkets. Supermarkets stockpiling inventory. Stockpiling inventory because the prices keep going up. Major food manufacturers out there, General Mills, Campbell Soup, J.M. Smucker, and many others, raise their prices. They have to raise their prices. Now, you mean to tell me this is all due to higher labor costs? No. You're pumping way too much money into the system. You're handing out too much money to people that are not working for those dollars. And there's a few of us out there, continue to beat this drum when it comes to inflation. I described it in the past. As this. Federal Reserve, and just some odd years ago, I was talking about this. I compared it to the television show The Simpsons. And Homer Simpson's neighbor is a straight arrow, honest guy, Ned Flanders. And Homer, there's been episodes. Homer would go into Ned Flanders' garage and borrow his tools and his equipment. And, of course, Homer would never return them. The Federal Reserve and what they have done, and what they have done to us, what they've done forcing down interest rates to ridiculous levels. Okay, what they have done is taken tools out of my shed. Out of my shed. And my job, what we do at Markowski Investments, they've taken those tools out of my shed. And they haven't returned them. You've got to be an idiot not to understand that inflation is not running hotter than 10%. We went over this on the program, I think a couple weeks ago. If you go back to the same metrics that were used back in the 1970s, the same ones. This is before they started taking stuff out. Well, we'll take energy costs out of this. We'll take this out of it. You go back, it's running hotter than 10%. Back then, guess what? Inflation's running hotter than 10%. Your grandfather could have bought a CD paying him more than 10%. That's a tool. The value of your money, what your money can do for you, okay? What your money will get you is dropping every single day. Every single day. That, my friends, is a tax. Do you understand? It's a tax. And you need to get your arms around this. And again, this changes the dynamic. You go and you take a look at the things that we've preached about here on the program and reevaluating when and if you should retire based upon this. You need to take this into consideration. WatchDogOnWallStreet.com, WatchDogOnWallStreet.com. Again, become a part of our family personal CFO program, podcast, account repair kits, annuity help kits, all sorts of great stuff. WatchDogOnWallStreet.com or give us a call, 800-471-5984.
The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
You know, the problem is that we look to the government, we look to these people, the Federal Reserve, that they can actually fix things. That they actually can have some sort of handle, some sort of control on the economy and the interactions that happen between people on any given day. And they screw it up time and time again. Time and time again. And we get involved, and we've got this aid program here and this help program there. And what it does is it just causes disconnects. It causes disconnects. And I know I've said this before, but you got to think of the world around us, the economic world around us, like Mother Nature. And just how amazing it is. And there's no supercomputer. There's no people that you could put together at some think tank in Washington, D.C. that can central plan. You cannot central plan an economy. You can't. We have a situation right now here in this country. And again, this is a problem. This is a problem caused by the people in power. U.S. job openings right now are at record levels. The number of available jobs nearly matched the 9.3 million Americans who are unemployed but actively seeking jobs in May. What the hell's the problem then? What's the issue here? Well, I'll give you. The financial wizards are smart. All the king's horses and all the king's men running in, trying to put Humpty Dumpty back together again, going to fix the problem. Things like, hey, you know what? You don't have to pay your rent. No. It's a pandemic. You don't have to pay your mortgage. Guess what? We'll give you extra money. We'll increase food stamps. We'll do all of these things. You don't think that has anything to do with this? Basically government intervention. I was asked this question this past week doing a radio interview. They're like, Crystal, businesses are going to start finding a way. They're going to start. I was like, yeah, businesses are going to start finding a way. They're going to find a way to do more with less. I know in certain businesses, especially the service industry, that can be difficult, but they will. And it reminded me of, there was a scene in Jurassic Park. Yeah, I love that movie. What's his name? Dr. Ian Malcolm. Jeff Goldblum's character. He had some great lines in that movie. And they're in Jurassic Park, and I can't understand, what in the world's going on? How are these dinosaurs reproducing? Because everything in the lab we were designing, every dinosaur was going to be female. How is this possible? And he had a line. He said, nature will find a way. Nature will find a way. The world around us will find a way. The economic world around us will find a way. When there's a disconnect and there's a problem, without any government intervention, without any aid from some useless economist or any member of the Federal Reserve Board. WatchDogOnWallStreet.com. WatchDogOnWallStreet.com. Don't go anywhere. We'll be back.
You're listening to the Watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
All right. I know I discussed this on the podcast a week or two ago. I want to share it with you. This is just stuff that I've learned over the years. I want to couple it with this story here. Almost 1 in 5 young adults in the United States was neither working nor studying in the first quarter. The first 3 months of the year. Americans ages 20 to 24 were not in employment. 1 in 5. Not in employment, not learning anything, not taking any classes, not training for everything. This is known as the NEET rate, the N-E-E-T rate. That's up by 25% year over year. Is there any excuse for that? No, there's not. There's not. How could you? I mean, let's just say you're at risk first quarter of the year. You're at risk for COVID, whatever it may be. You mean to tell me you can't be studying, doing anything, bettering yourself online? You're just going to sit around and watch Netflix, are you? Listen, this is This, again, brought me back to a point in time. We've got clients all over the country, all over the world, different sizes, stripes, political dispositions. People find that kind of amazing. They're like, you got Democrats as clients? Yeah, I got lots of Democrats as clients. And guess what? I'll have debates with them. And I broke this down. This is a core difference between the left and the right. And by the way, I'm not a Republican. I left the Republican Party years and years and years ago. They're full of it too. But a client, very, very successful lawyer, major law firm. And he was a big time contributor to the Democratic Party. And I'm sitting down with him, having dinner. I've told this before. You got to sit down with people in love. Put a couple cocktails in them, and they will tell you how they really feel. And it comes down to this. The breakdown is this. They think that human beings are stupid for the most part. That's basically kind of the nicest way I could put it. They just don't think people are very smart. They treat people like rescue dogs. It is their job to rescue humanity because these people can't do it on their own. Now, my belief system is you've got it all wrong. That each and every human being out there has been given some God-given talent. And everyone's different. And they need to go out there and they need to figure out what that is. They got to figure out what that is, and they got to make something of themselves. And it's not about how much money you have. It has nothing to do with that. Being successful, overcoming obstacles, and achieving goals. And you want to talk about that is the biggest breakdown. This is between the left and the right. Obviously, there's people out there on the left that they want to be taken care of. That's wrong. They're never going to be truly happy. But to see these numbers and to see the amount of people out there right now that are not working and the amount of job openings, again, it's embarrassing. I talk about employment in the United States, and I often tie it into immigration. And I got a couple immigration stories I'll do later on in the program, hopefully, if we get to it. You understand why so many people want to come here, right? You do get that, right? You do get that. They do have the internet and the news and other places around the globe. And 9 million job openings plus in the United States. I live in El Salvador and I have little to no prospects. Guess what? I'm moving. I'm doing whatever it takes because I want a job. Anyway, I got to get into taxes as well. The media, they were high-fiving one another. They were so excited. So excited. Talking about just, how Biden is bringing nations together and with Janet Yellen, look at what they're doing. He got 130 nations to agree to support his corporate tax proposal for a global minimum tax on corporations, 15%. Now, mind you, the Biden administration wanted it at what, 23%? So all of a sudden he gets 130 nations that are going to sign off on it. And we here on the program, what do we tell you? Never going to happen. Never going to happen. It was funny. The UK right away carved out a special exemption for their financial firms. They got that area there in London. Carve out for the new global tax. They're not included. And all it's going to take is a couple of countries. And as it turns out, 9 countries came out and said, nope, we're not going to participate in this. And guess what? 3 of them are European nations, members of the EU. Estonia, Ireland, and Hungary. Now, if the EU wants to go with this global minimum, it has to be unanimous between all the countries. So what the EU will say, hey, Joe, we tried, we signed on to your thing, but we got these troublesome countries here, and it's just how it works. We told you this was going to happen. Why in the world would Ireland raise their corporate taxes after lowering them to 12.5%? They saw an influx of companies decide to move there. This cartel-like idea when it came to taxes was destined to fail. Destined to fail. You know what? You don't think that, like, we'll say the governor of New York, Andrew Cuomo, you don't think that he'd like to have a United States tax on states that is all the same? Or the guys from Illinois, Pritzker, whatever it may be, to keep businesses from leaving New York and Illinois and many of these other high tax states? Of course they would. But that's not what we're about. We're about competition. WatchdogOnWallStreet.com. We'll be back.
Chris Markowski is the watchdog on Wall Street. Well-known author, investment banker, consumer advocate, analyst, trader. Chris Markowski is the watchdog on Wall Street.
You want answers?
Exposing the lies and myths that the big brokerage firms, the mainstream press, and the government are pushing to keep Americans away from financial freedom.
You can't handle the truth.
Bringing America the truth about what really happens in the financial world.
Ladies and gentlemen, we're not here to indulge in fantasy, but in political and economic reality.
This is the Watchdog on Wall Street.
All right, welcome back, everybody. It is the one, the only, the Watchdog on Wall Street show. We were talking about taxes coming out the last hour of the program, and I got to talk about this as well. I don't believe right now, I made this perfectly clear, I don't believe that Joe Biden, President of the United States, is calling the shots. I really don't. I think most people out there don't. He's got his people around him that are telling him what to do. What needs to be done, and he's just kind of going along with it. Again, almost you think of the movie Boomerang. He's kind of like Lady Eloise. He's a name on the package, but he doesn't really have any power. I was thinking about this past week, back when Hillary Clinton was battling Barack Obama for the Democratic nomination. And there was a debate that took place on ABC, and it was in regards to capital gains rates. And Barack Obama, part of his platform is he wanted to raise capital gains rates. Wanted to raise them. And again, Charlie, at that point in time, the establishment wanted Hillary. And I tried to back Barack into a corner on this. And Hillary Clinton came out and said, no, we don't want to raise capital gains tax rates. In the question, Charlie Gibson said, when Bill Clinton lowered capital gains rates, which he did, when he lowered capital gains rates, the amount of revenue to the U.S. Treasury went up. It increased. And Barack Obama, the statement, his retort was, well, I want to raise capital gains taxes due to fairness. And at that point in time, I crossed myself and I said, I really hope Hillary wins. I really, really hope Hillary wins, because this is insane. This is insane. You're going to raise taxes due to fairness? It's not about revenue coming into the Treasury? I thought about this past week because breaking down Biden's capital gains wish list here. The United States would tax capital gains and dividends for the rich at among the highest rates in the developed world. That's right. The highest rates in the developed world. The top rate high-earning Americans pay on dividends and the sale of appreciated assets would jump to nearly 49% when you combine federal and state taxes. Now, think about that for a second. You are putting your money at risk when you invest, right? You get tax capital gains. You're putting your money at risk. And there's a model. Again, this is what I do. I evaluate risk, reward. If all of a sudden that reward that you might get by putting your money at risk is chopped in half by 50%, you might say, hey, you know what? I'll just hold on to the cash. I'll just hold on to the cash and just lose 10% plus a year on inflation. Think about that. Highest capital gains rate in the world. What do you think that's what's going to do? Right now, we currently tax dividends and long-term capital gains for the wealthiest Americans at 29%, which in my opinion is way too damn high. Way too damn high. But then you also think about the rates that they're going to also go up for dividends. Again, if you consider dividends, the tax rate is going to be well above 60%, close to 70%, because dividends are first taxed at the corporate level, then taxed again when the dividend is passed out. Think about how obscene this is. So you're going to want to put money at risk for this type of a reward? No, it's going to be a major problem. And again, you've got the bipartisan Senate infrastructure deal that they're working on. But in that deal, you got another $100 billion going to the IRS. That's right. That's right. Well, no, excuse me. $100 billion in new revenue, okay, is what they want to get by supersizing the IRS. Excuse me. It's an additional $40 billion to the IRS. Release the Kraken. Release the Kraken. Anyway, here's some financial planning stuff I wanted to talk about as well. This story was bouncing around, talking about how there's going to be a major transfer of wealth, upwards of $35 trillion. Older Americans stockpiling a record $35 trillion, and the time has come to give it away. The Biden administration knows this too. Biden doesn't know. The people around him know. This is why they wanted to change the rules when it comes to transferring assets, including stocks, what is included the step-up basis. So, in essence, when you transfer, you've got 100 shares of XYZ that you give to your granddaughter. And when it transfers over, guess what? The price that when she receives it is the price that, the basis of where it will be taxed when and if she decides to sell it. They want to do away with that, and they want to actually transfer over where you bought it. See, they know that this transfer is going to take place, and they want their hands all over this money. Another issue when it comes to this, too, and this major transfer that's taken place. And this is something that we help our clients deal with. We've got quite a few families out there that have built up businesses, family businesses. And again, sometimes you say, hey, you know what? I want to give this business to my kid. You can. And sometimes it works. But many times it doesn't. And it's these again, we try to get this across to people all the time. You really have to be honest with yourself and honest with who your kids are and whether or not they're going to be able to take this on, whether or not they really want to take this on. The overwhelming majority of family businesses fail when handed down to the next generation, and even worse, when it's handed down to the generation after that. Not everybody can do the things that you did or that you did to actually build that business up. What it took. Again, you got to go back. You got to think about what it took. What it took. How did you create this thing? And again, you're handing something established over. But because it wasn't built by your kids, guess what? They might not appreciate it the same way you will. I caution people when it comes to this. I said nothing wrong with doing it, but make sure it's a right fit. Make sure it's a right fit. In the same way, I said don't pressure your kids to go to a college when they don't know what in the world they want to do. It's a waste of money. Let them figure it out first. Yeah, it's a fine line, and it's stuff. It's part of the financial preparation process and things that you're going to have to deal with. In some respects, you know what? Sometimes you'll be better off if you can get a good price for business to sell it. But if you don't, again, I highly recommend a long apprenticeship process for the next generation. Wanted to talk about this as well. Gotten a lot of emails over the past several weeks in regards to SPACs. Well, why are they falling off a cliff? Why did you buy into this crap in the first place? SPACs, special purpose acquisition companies. I know. I'm repeating myself. I've talked about this here on the program. What's a SPAC? What's a SPAC? I'll tell you SPAC. SPAC is set up by a promoter. Yeah, I remember back when I first moved to New York City, graduated college, I had kids that I knew in college that actually had a job as club promoters. Their job was to bring people in. They got paid based upon bringing people in to the club and hosting parties there. Well, that's what SPACs in essence are. They've got their little promoters out there. The promoters set up a shell corporation. In this shell corporation, there's nothing. No assets, no business. No business. But the insiders, the promoters, the people put the thing together, they get a ton of stock in this shell company at a deep, deep discount. Then they go out and they raise cash. Raise as much cash as they can. They sell shares in an IPO that's registered with the SEC. They sell this thing out there, and it's got nothing but cash in it. The purpose, these promoters say out there, because we're so smart, we're so great, they actually, SPACs put together by athletes and actors and actresses. We're going to find a private company to merge with. So the owners will have a public market for their stock. Now, I was approached several times. Hey, you take Markowski Investments and Compass Financial Management, your radio show, we could take it public. You can merge it into this SPAC. No, because it's wrong. First and foremost, I don't believe that financial services companies should ever be trading public, because you cannot serve two masters. You have to serve your clients. You can't serve your clients and serve your shareholders. There's a disconnect there. Financial services company, what we do, should not be a publicly traded entity. But I knew the racket that they were trying to pull off. The reality, what happens with these SPACs, and I know they've a lot of momentum over the past couple years, right? Well, it raised $86+ billion in these things. But what is happening with them? They're falling apart. And the one part of the pitch for the SPACs is it's going to allow mom and pop investors early access to IPOs, and it's almost like private equity for mom and pops. No, it's just a new way of taking a company public through a different route, an end run around, and making people very, very rich that are in first. We talk about this often here on the program. Don't be a greater fool. Don't be the one holding the bag in this latest and greatest investment trick. WatchdogOnWallStreet.com, WatchdogOnWallStreet.com. Again, all the help you need available right there. Our personal CFO program, account repair kits, all sorts of great information. Podcast, WatchdogOnWallStreet.com, or give us a call, 800-471-5984.
She was black. Sunshine go away today. I don't feel much like dancing.
Taking Wall Street's liars, crooks, and cheats out behind the woodshed. You're listening to the Watchdog on Wall Street.
Damn straight. Welcome back, everybody. July 1st. If you're not a fan of the New York Mets, I'm not a fan of New York Mets, but I know this story because the world I live in. July 1st, just went past July 1st. July 1st, for if you're a New York Mets fan, is known as Bobby Bonilla Day. And it's not because Bobby Bonilla was this awesome player for the New York Mets who did something incredible on July 1st. It's known as Bobby Bonilla Day because it's the day when the New York Mets have to cut Bobby Bonilla a check for close to $1.2 million. You say to yourself, hey, it's a contract that they put together. They're going to be paying Bobby Bonilla $1.2 million a year through 2035. Why? Bobby Bonilla retired in 1999. No, this is not a pension. It's not a pension. This is another Bernie Madoff ripoff. I'm not making this up. Okay? Bernie Madoff convinced the owners of the New York Mets that he could give me the money that you're going to pay Bobby Bonilla. Tell Bobby that you'll pay him $1.2 million a year for X amount of years at an 8% a year. 8% over, you're gonna over time, over what you were going to pay him then, because I'm so good at what I do, I will show you a higher rate of return than that, and you can make the difference. I'm not making it up. Not making it up. And they agreed to it. Bernie Madoff was so good at his ruse. People believed in his BS to that degree that he could get away with this stuff. Again, I talked about this earlier on in the program. I study psychology and these conditions and how these people operate and what these sociopaths are able to pull the wool over people's eyes. Anyway, again, I have to talk about cryptos. Cryptos, what I'm discovering in the world of cryptocurrencies is that it's now a religion. It is. It is now a religion for many people out there. The true believers in cryptos, man, oh man, if I say something about him here on the program and cryptocurrencies drop over the course of the week, they want to conduct jihad on me. It's my fault that it went down. Yeah, that's how vapid some of these people are. Let me explain to you something. 2021 is going to be a record year for investment fraud, reported investment fraud. There have already been over 14,000 investment scams reported to the FTC. 14,000 already. Now, again, I've been through different periods when there were massive amounts of fraud. Go back to the earlier part of my career. That's when all the boiler rooms were out there. The Stratton Oakmonts, the Wolf on Wall Street, Jordan Belfort, all that crowd. There's more scams being reported today than there was back then. Now, my reasoning behind this is you got a lot of younger people out there that are putting their money at serious risk and losing it all. A lot of older people, when they lose money, when they get ripped off and scammed, they just chalk it up as a loss and I was stupid, whatever it may be, or they're embarrassed and they don't want to report the loss. And this is what we come down to speculation. We talked about this here on the program. If you went out and you took all of the money that you saved you paying yourself every single month, but you didn't pay yourself. You just bought lotto tickets with that money. Think that's smart? No, it's not smart. You don't take your entire portfolio and what you're doing and put it into some fly-by-night nonsense. You don't do that. Okay? Everything in life that has meaning, value, and worth involves work, time, and effort. You need to get your arms around that. You need to study people who have done it and done well. What has made them successful? What has made them successful? Sure, from time to time, somebody will win the lottery. Somebody will win the lottery. Comes true. I take a small portion, and I speculate on things. But again, I go into it understanding that I could lose it all. That small portion, if it doesn't work out, and I can afford to lose that. You cannot gamble with your entire portfolio. It's insane. And the funny thing is, do you honestly think that the FTC or the SEC are going to be able to help you with this stuff? Well, regulators are now, they're saying, we want more control over cryptocurrency, the cryptocurrency universe. We want to understand what's going on these exchanges. By the way, I looked into what these exchanges charge for transactions. It's 1970s brokerage rates. I kid you not. 1970s brokerage rates through the roof. But they're not going to be able to do a darn thing. They weren't able to do anything about the boiler room operators. They weren't able to do anything about the subprime situation. That's not what they do. So do yourself a favor. do yourself a favor. Don't put money at extreme risk unless you can afford to lose it all, and understand that you can and you probably will lose it all. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Count repair kits there, too. Don't go anywhere. We'll be back.
Chris Markowski is the Watchdog on Wall Street. This is the Watchdog on Wall Street.
Yeah, you know where I also get some nasty messages and email from real estate people in certain areas of the country. Certain areas of the country, in particular, major metropolitan areas, talking down the market. I don't have to talk anything down, nor could I talk down the market. I don't have that type of power. Are you out of your mind? The market is what the market is. And in certain major metropolitan areas, it's bad. I actually saw a BS story on CNBC where they were talking about apartment sales and luxury apartment sales in New York and how some of them have come up as of late and it's getting hot again. All right, sure. Give me a break. I can go online. I can see what's being sold. Sure, there'll be the occasional one that'll be up there, probably sold to some person that's got pumping money out of the ground, which is oil, from those areas of the world, Russia, the Middle East. Just because they have the money, it's got to go somewhere. But no, it's bad. It's all over the world. I saw this. This was out of the UK, and how two major commercial real estate funds shut down completely. Shut down. Their investors can't get out because they have to sell the properties to make them hold. You know what it reminded me of? I thought about it because we had a real estate investment trust go bust a few weeks ago here in the United States. It reminded me of, this is 2007. 2006 was when we really started warning people. Everybody really started getting nuts and wanted to buy 2 or 3 pre-construction condos in Florida or Vegas or Phoenix or something like that. We said, this is problematic, people. Problematic because you're buying a home and you're just flipping it. You're not improving the value of that home. And it's going up just because it's going up. See, when people tell me things are going up just because they're going up, yeah, they might for that period of time, but eventually they're going to come down to their intrinsic value. Give you an example. Where I live here on Long Island, it is 30 miles out of New York City. A mass amount of people are leaving the city. You can't find houses. And what a lot of contractors are doing is they're actually going to people and trying to convince them, because there's a lot of older homes here. You got homes that are over 100 years old. You got homes that are 50, 60 years old, and they need work. And they're going in and they're saying, hey, you know what? Let me come in. I'll fix up your home. You can look to move here, move there, and then we'll sell it for a higher price. The places will sell automatically right now, but at least they're adding value to that house, making it better. There's a difference. But anyway, going back to 2006 into 2007, I'm warning people about this. People are emptying, coming up with schemes where they're using their 401k and their retirement money for real estate. Listen, there was 2 hedge funds in 2007 at Bear Stearns. They went under. There was the Bear Stearns High Grade Structured Credit Fund and the Bear Stearns High Grade Structured Credit Enhanced Leverage Fund. And what did the powers be tell you at that point in time? What did they tell you? Oh, the subprime problem is contained. I can't see how this real estate issue is going to be contained. And again, we talked about how certain pension funds have now got involved in real estate and buying up real estate because there's just not enough housing available. People can't afford to buy into the home, so they'd rather rent them. The problem I have right now, and I'm looking into this, and again, I'm not a conspiracy theorist, but it's almost like it's by design. You're going to have all of these people, these landlords out there that are renting out their properties. All of a sudden, the government says, guess what? You can't collect on the rent anymore. Your tenants don't have to pay you. They still have to make their mortgage payments. They still have to make their tax payments. They still got to pay the bills. They still got to keep up these pieces of property, but they've got no income coming in. And again, who knows? It's supposed to end at the end of the summer. What if they extend it even further? Then what are these people going to do? They're going to walk away. They're going to walk away, and it's going to depress the values of these pieces of real estate. And guess who's going to swoop in? BlackRock. It's almost if it's by design that they're going to be able to come in and buy up all of these pieces of property on the cheap, and it's wrong. It's wrong. The government wants to say, you know what? We're going to say, you know what? You don't have to pay your rent. Well, then the government should pay the rent. I don't even understand how most of the stuff that they do in Washington, D.C. is constitutional. It's patently absurd, quite frankly. Anyway, watchdogonwallstreet.com. Watchdog on wallstreet.com. Take advantage of all the great stuff we have right there at our site, our personal CFO program, podcast, all sorts of great stuff. Watchdogonwallstreet.com or give us a call, 800-471-5984.
Ice, baby. All right, stop.
The only man who is taking on the Wall Street establishment. You're listening to the Watchdog on Wall Street with Chris Markowski.
This is fascinating as well. It's just, something that, again, we don't know how it's going to turn out in the end. There's a lot of speculation that's involved. But I remember back when I first moved to New York, first starting on Wall Street, and I'm waiting tables and bartending to make extra money. And I worked for this wonderful family from Italy that came there in the 1970s, opened up their first restaurant. Now they have restaurants all over. And I learned a lot from them when it comes to business and understanding business. And I remember when they were looking at a space, they were considering a space where they were going to open up a new restaurant. They would actually park themselves in front of that space over the course of an entire day and count people. How many people actually walk by? And the reason why I bring this up, it matters. Traffic matters. The reason why malls are going under, they're going to continue to go under. They lose anchor tenants. Then all of a sudden, the smaller stores within the malls say, hey, you know what? There's not as much traffic. You can't charge me as much in rent. And a lot of these malls now are having to go towards, hey, you got to pay us a portion of sales. And all of these properties are depressed. But what happens when you have major businesses in in metropolitan areas that don't bring the workers back? Now, Goldman Sachs and J.P. Morgan, this is New York, want their workers back full time. They want their workers back full time. But what some of the other investment firms are doing as they're using it as almost like judo. They're saying, oh, okay, we don't want our workers back full time. If you want to, you can only come into the office 2-3 days a week. You don't have to come in Monday and Friday. And guess what? People say, well, you know what? Maybe I don't want to work at J.P. Morgan or Goldman anymore. I want to work somewhere else. Again, this is pandemic-related stuff. But it's changing the nature of business. It's also changing the nature of real estate. Again, needing to understand the terrain. People will say to themselves, hey, I don't have to commute into the city 5 days a week. I can live further out. I can live further upstate or further out east or out west or south. It doesn't make any difference because they only have to go in a couple days. Changes things. Anyway, this as well. I'll bring this story up. I woke up very early after the July 4th extended weekend. It was actually July 6th. July 5th were off. And I took a look at what the news at the time, and hundreds of people shot over the course of the 4th of July weekend. And it gets me upset. I look at, because I love my country. I do. I love the ideals of this country, but in many ways we've just lost our way. And no, gun control is not going to handle this situation. It all comes down to where you live. Quite frankly, it comes down to where you live. If people in these neighborhoods where all of this violence is occurring, if the people don't care, if they're not going to work with the police department, then you could spend all of the money in the entire world. As again, Joe Biden goes to Chicago, promised billions of dollars. Do you honestly think anything is going to change? Do you honestly think anything is going to be different? And what happens to business? What happens to business? In New York City, hotel revenue in New York City, depression. Room revenue down 60%. Now you read the stories on TV. You're going to take your family into the city with all the violence that's taking place? Nah. And I used to love the place. Watchdog on WallStreet.com. Watchdog on WallStreet.com. Don't go anywhere. We'll be back.
You're listening to the Watchdog on Wall Street. You should believe in math, not magic. You're listening to the Watchdog on Wall Street with Chris Markowski.
I got to have lunch with friends, very close friends from Florida that were up near and dear to my heart. They had their son up at the tournaments, and it was just great to see them. Missed them very much. And they're both educators. One's a teacher. One is a counselor at a school. And we were talking about education and whatnot. And one of the points that I brought up and in conversation, and they agreed with me 110%, because we were talking about schools and school districts and the success and, how proud we are, our school district, how proud we are. My wife talks about, wow, look at all these unbelievable schools that the kids from our high school are going to, and more than 50% of the graduating class is National Honor Society. This is phenomenal. And I said this before, because, again, I get a kick out of, nations putting out the best school districts in the country. The best school districts in the country are the school districts where parents give a damn. That's it. I was laughing about it, talking to my friends. I said, every school is going to have their bad teachers. Every school is going to have their great teachers. Everyone. You could take the best school and the number one ranked high school in the country, and you can take their entire staff, and you could put them at the worst school in the country. Do you think they're going to be able to do a damn thing? And guess what? You can even throw money at it. You can even throw a ton of money at it, because that's always the argument here. We don't spend enough money on schools. There's a story here out of Illinois and how their educational spending has gone through the roof. Over $16,000 per student in the state of Illinois. And they took a look at the test results since they started adding all this additional funds. Stayed the same in math, went down in reading. If the parents don't care, the kids don't care. If my kid happens to get a teacher that I think is just not very good, and I'll figure it out fairly quickly, guess what? I'll make sure that my kid will get the extra help, may get a tutor. I don't care. I'll pay for it. Doesn't make a difference to me. It's important to me that my kids understand the material and they do well. That's the difference. Anyway, moving on. Again, this is funny because it used to be something that we actually helped a lot of people out years ago. We still do. We still will help our clients get health insurance for themselves or their small business. But, we used to have, the high deductible health insurance coupled with the health savings account. And I'm very, very critical of George W. But his domestic issue, which really worked, and it was actually Rick Santorum's idea, was this. High deductible insurance with a health savings account. You're buying the insurance that you need with the deductible that you can afford. Again, it's the catastrophic health issues that are difficult on people. But there was a story, they did a study. And again, I give kudos to Donald Trump on this because he pushed for this. He pushed for full disclosure when it comes to healthcare costs in hospitals and what they're charging. And the information's coming out right now. And as it turns out, shouldn't surprise anybody, hospitals charge uninsured people the highest prices. Uninsured people the highest prices. Now, again, I have work done in my house. Let's say if I need to have something done, I'll get a phone call, electrician. You know what they always ask me? Can you pay cash? And I think of that Sebastian Maniscalco bit where he's talking about his father and as a kid going into, J.C. Penney's or Sears and he wants to buy a new refrigerator. And he starts to argue with the salesman about, I'll pay you this. I'll pay you cash. Yeah, right, sure. But, many businesses, you pay them cash, though, they're gonna charge you less. A lot of service industries, we all know this, okay? Why is it, if you're paying cash, is it more? And they got these various different healthcare consultants and people who advise things. Well, because the insurance companies that send us millions and millions of dollars worth of money on a regular basis, we're going to price them lower. It doesn't make any difference. The people still need to be served. Whether they're going to that insurance company or they're paying cash, it doesn't make any difference. It's the same thing. It's a racket. There's never any effort, really, to deal with health care reform. Again, take a look at your insurance costs, if you actually are paying them. Again, a large swath of the population are being subsidized by their fellow taxpayers. They say subsidized by the government. No, subsidized by their neighbors paying for their health insurance. It is a debacle. It is a disaster. Oh, there's no inflation out there. Really? My health insurance has gone up an ungodly sum since Obamacare. An ungodly sum. And every year it continues to go up. But there's no inflation out there. Oh, no, and you got this healthcare stuff taken care of. The issue is, people, and again, it's going to go to some of the domestic policy issues that Biden is pushing. Back when Obamacare was established and John Roberts' Supreme Court gave it a seal of approval, they had that Supreme Court case, I said, that's it. Once the government starts an entitlement program, once they start giving people free stuff, it only expands. It never shrinks. It only expands. And people say, well, Trump tried to repeal Obamacare and John McCain stuck it to him. Yeah, John McCain stuck it to him because he wanted to. But if it wasn't McCain, there would have been somebody else that stepped up to the plate. Republicans wanted nothing to do with this. Nothing. They talked a big game. They didn't want to reform it. They didn't want to be those ones, you're taking away our Obamacare. It's the same nonsense when they try to reform Social Security. Got to take a break. Watchdog on WallStreet.com. Watchdog on WallStreet.com. We'll be back.
With his song telling my whole life.
Chris Markowski is the Watchdog on Wall Street.